Hello and welcome back to Bunnex Investment Group. So in this video, we're going to talk about how to master sniper entries. So this is going to come in two parts where we are going to start on how to spot the liquidity and then when to actually buy and sell within those liquidity points. So it's basically now confined to how to make your entries whenever the market comes to the liquidity point. So in this video, we are going to talk about how to spot the liquidity points within the market as a way to master sniper entries. So without wasting much of your time, let's actually jump into the video. So the first thing that we are going to do is to give you a template of what we'll be looking for on the charts. So I've broken down the steps into two so that it will be very simple and easy to follow as well as applicable to your market. So step one is basically to go on the H4 time frame, right? We all have that on our trading platforms. This particular trading platform that I'm using is TradingView, and mind you, we don't need any indicator for this particular way of spotting liquidity points on the market. So we are going to go on the H4 time frame. Then the first thing is to look for an H4 impulse that breaks any high or low in any direction. So we need to see an impulse. By impulse, we are just saying a move that will break a high or a low, right? Basically that is the first step that we need to see. So after seeing a break of a high or low, we will validate that move as an impulse. Then step two is now to go within that impulse that has broken the high or low and look for the first opposite candle within that impulsive move and drag its high and low into the future. So in this case, we can see that the market would have given us this move and created this high. After that, we can see the market breaking this high. Therefore, our valid impulse or our valid H4 impulse is this one. And after having this valid impulse move, we now go within the impulse. We look for the first opposite H4 candlestick, right? In this case, it's an upward move or an upward impulse. Therefore, the first opposite candlestick should be a red candlestick. So it will be the first from this point going there. We are looking for a red candlestick. Then drag or mark its high and low, probably using a rectangle, and drag it into the future like that. So with doing that, we would have spotted what we call a point of liquidity within the market. So someone may actually ask, what is a liquidity point or liquidity zone? It's basically a point where we expect to see high frequency traders adding more positions to their initial ones. So that is somehow what we call the order blocks, as you all know from most context over the internet. So let's now go over the charts to see how this is done in practical markets, right? So we've said the first thing is actually to get what? To get a break of structure or a breaking of the high or low of the market in any direction. So I've already marked for easy reference. In this case, we can see that we had the market, it went up like that and broke the high of this point. So after breaking the high, the next thing was now to look for the first opposite candle within the impulsive move. This was an impulsive move going up. The next thing was now to look for an opposite candle. In this case, we had this red candle. So after having that red candle, we protrude its high and low into the future and expect to see the market to retest that point. So that is the point that we refer to as the liquidity zone. So in this case, the market actually came back to that zone. So as I have said earlier, our next video on this topic will actually be how to get your entries whenever the market gets into these liquidity zones. That's now how to get the sniper entries. So after that, we can see this impulsive move. Did it break anything? Yes, it did. This was a high that it broke here. And after that, the next thing that I've said is to now look for the first opposite red candle in the lateral direction of the impulsive move, which is this one. So that is the point that we protrude into the future, and we can see the market came back to retest and went up again, right? So it was another proper or a liquidity zone that held. Then another point, we can see this impulsive rise, right? From this point going up. Did it break anything? We cannot see any high or low that has been broken significantly. Therefore, it was not a point or a move that we were going to validate as an impulsive rise. Then after that, we can see this move, right? This impulsive drop, it broke this high, this low, I mean. After breaking that low, it became a valid impulsive drop. Then the next step is now to look for the first opposite candle within that impulsive drop. In this case, we had this green candle, right? Protrude the high and low into the future, and this is what happened. We can see the market came back to touch that same point to give us a possible point of sniper entry. And of course, you all know that Forex is Forex. The market is always the market. You can never lock it and always win. There are some points when the market will actually trick you, and we cannot run away from that. The only thing that we need to focus on is to have more of winning trades than losing trades. So in this case, we can see this impulsive drop going down, right? It broke this low, which made it a valid impulsive drop to us. So our next thing was now to actually say our first opposite candle, which is this one, and protrude it into the future. Unfortunately, we can see that it actually went past that zone. This was the point that we were expecting or anticipating to see the market to go down. Unfortunately, the market actually passed through that point that we anticipated to see the market reversing, right? After that, we can see that this market is almost in another form or in another direction. Did this impulse break any high or low? No, therefore it was not a valid impulse. Then we had this impulsive rise which broke this high, and the next step is to look for the first opposite candlestick, which is this red candlestick. You can see this was the first opposite candlestick, and it was the point that we anticipated to see the market come back to grab that liquidity. So it actually went up and came back to that point to grab the liquidity, right? We had another impulsive rise. In that impulsive rise, did we break any high? Yes, we actually broke this high, and after that, where is our first opposite candle? In this case, it was this red candlestick, which was along that impulsive rise, and we actually protruded that into the future. That is how we actually got this point. We can see the market went up and came back to that zone again. Then we had this impulsive rise, which broke this high, which is also a valid impulsive rise. Then the first opposite candlestick in that rise was actually this one, right? After having this one, we actually protrude its high and low into the future, which actually gave us this move going upwards. So did this impulsive rise break any high or low? No. Therefore, it was not a valid one. However, in this case, it is also another point where we were going to lose, because this impulsive drop actually broke this low, and after breaking this low, we had this point as a point that we anticipated to see. Liquidity, but unfortunately, the market went past that. Then this impulsive rise actually broke this high. As we can see, after breaking that, we could actually validate it as an impulsive rise. The first opposite candle was this one, and protruding it into the future, we had a retest of that zone. That is how we actually went to go up, right? This was a valid impulsive rise. Our first opposite candle was actually this one, right? As you can see, within the valid impulsive rise, and the market came back to retest that zone, right? So right now, what have we seen? we can see that we have been issued this drop, right? And within this drop, we actually broke this low. So the first candlestick was actually this one. This is where we anticipated to see the market retest using this particular method. So the market is actually went away, and we'll be expecting this move probably to break this low so that we'll have a retest of the liquidity zone. On that note, we come to the end of this video. Thank you for watching, like and subscribe.